All right. There's a couple of points there against our first entry point there, 93. If you took that, and down to 275. We're on a different bar now, so be careful there. Bonds did not like that PCE number that came out this morning. It's a nice little rotation there against our first support level. I mean, obviously we didn't get down to 92, but again, like I said earlier, I scale in around my levels. So the PCE numbers that they were expecting this morning, they were expecting plus 0.2, came out of plus 0.2. The core, they were expecting plus 0.3, came out of plus 0.3. That was month to month, year to year, 2.6 on the index, and the core it was 2.9. So everything came in line there with the PCE numbers. Again, that's what the Fed likes to look at as inflation targets. As we come back down here again, remember, be a little bit careful there at 92 because of the price action. Let's see, so again, those are a little bit high for what the Fed is looking at, 2.9% year to year. Again, the 2% target. So the smaller inflation than there used to be, obviously, but still above their target there at the 2%, which again, if you're looking at data, always looking at data because that's what everybody looks at. And you saw a little bit of a hiccup there in the S&Ps, but bonds definitely did not like it, as you can see here. Those numbers came out at 7:30. Now we have this number right now coming out here, Chicago PMI, and let's see what this does to the market here. And be careful here at 92. We're close to a number and close to the level, and we kind of level got traded already. There are the levels in the chat for those of you who might have missed them. All right, the ladder ticket, there's not really cleaned up that much. Let's see what the Chicago PMI number does. All right, it's down ticking here a little bit. Again, be careful there at 92 because of the not closeness of the number and everything. If you're taking it, you're being very, very aggressive. You got down to 91 here. You're getting a little bit of a rotation here off of that. But definitely not the 92. You definitely could have made a case for 91. Only if you're very aggressive and wanted to take a shot. Chicago PMI 46.6. They were expecting came out at 41.5. So a good miss there. So if you did take the lower end of that 92, you getting paid off here. Thanks there, Pat. All right, the next support level we're looking at the downside is down at the 84 area. Maybe here a little bit at 89 for those who are a little aggressive. And now at 9 o'clock, at the top of the hour, we've got consumer sentiment coming out. All right, again, for those who are very aggressive, maybe a little support down here, but only if you're very aggressive. Otherwise you're looking at the 84 next. All right, coming down quickly down here to the 84 area, kind of maybe flush down there to 85.50. Now we're maybe not close, but no cigars. Seems like it's stopping here at 86. Let's see. Got down here to 5.5. Remember, I scaling around there, so I'm there at 85, 84, and 83. And looks like it's going to stop here at 86. Yep. Yeah, you can see the build up in volume there around 86. Missed it by just that much. That's annoying. So be careful there at 85 if we come back down here. Again, welcome some of the new folks that are here. We're trading mini S&Ps. We're scalping these markets. We're trying to take advantage of ebbs and flows of the market. We're trying to scale these markets for about 2 or 3 points on our trades, depending on volatility, obviously, and depending on your risk tolerance and how you manage it, how you scale into them, how you don't. Everybody has different risk tolerances. So you have to understand the methodology here and then adjust the methodology to your risk, or adjust your risk tolerances to the methodology, and to try to take advantage of these ebbs and flows when we have them. Lately, we've been exceptionally slow, and that's fine, but we ran through almost ran through a couple of our levels here, so now be careful here, as we are on the same bar, so there's some reason to stay with it, but they did kind of missed out on the 85 there by just a little bit, so it is coming back down here. 84 is still doable, especially if we this first we're still on the same bar. Coming down here to the 85, if you stick with that, it's on the same bar, so there was a reason for it. As long as we didn't close that bar. Okay, so now the bar is close, so be careful here. A little bit riskier. Then trade it smaller. There we go. Again, we talked about the risk involved, and obviously there was riskier there to get the 84 because of the bar closing. And maybe you adjust it here to 83. And always keep your stops in place, right? There's no reason not to especially with the bar closing. There's an added risk there, especially when we get close to a level and it rotates off. We have to accept the fact that there is a little bit more risk involved and then adjust accordingly. And for those of you who are more risk averse, you're not going to take the trade. For those of you who are trading multiple contracts, you lessen your exposure. All right, we got down to 83, popped up to 85 there, and obviously didn't get filled there at 85, but now we will. All right. If you did adjust there a little bit to the downside, did okay. All right. So make a little bit of adjustment. Even if you stuck with 84, you did okay. So, but if you did adjust down to 83, you did all right as well. Okay. Again, it's just a matter of understanding the risk of all involved and then adjusting a little. I'm trying to help. I'm trying to give you different options because everybody here trades differently. But we did bounce there off of our level as well. So kind of nicely rotated for us. Little resistance right now would be around the 95 area. All right, couple nice little trades there against our couple of support levels. Nice little bounces off of those levels. And if anybody has any questions, feel free to ask in the chat. Don't mind questions. All right, now we're just going to chop it around here at the bottom. We do have a number coming out here at 9 o'clock. I just kind of hanging here on these interim lows. See where we want to go from here. All right, coming back down here to the lows, we're looking at the 74 area next. This is our little support area. We have a number coming out here at top of the hour, so that to contend with. All right, we drifted down to 79 and change there. We're looking at the 74 area. We have a number coming out here. Again, maybe creating some volatility. And continue the downtick down here to 73. We're looking at 74. Next support level. Again, if anybody has any questions, feel free to ask in the chat. Do have a number coming out here in about 2 minutes. Again, we like to be flat when numbers are released, so consequently, if you're very close to a level and you have to make a decision whether you want to leave the orders in place or not, especially with volatility around the number. And again, everybody here trades differently, so you take it off, that's fine. If that's what makes you comfortable, you have to do what makes you comfortable as a trader. You try to explain the risk, and then you have to make those decisions on your own as to how you're going to manage that risk. All right, bouncing off of that 77 a little bit here. Do have a number coming out here in a minute, so again, that in mind. As you can see how the ladder ticket kind of thinned out a little bit there. And there's a little volatility. Okay, got down to 75. If you left the 75 in there. No, sorry, 76. I'm sorry. Got down to 76 really fast there, and I popped it back up. Again, be careful there, here with the volatility. Got down to 76, popped it back up. Okay. I don't know if you got in there, Don, or if you did. Consumer sentiment 58.7. They're expecting came out of 58.2. Okay. Well, kind of missed that entry point by just a little bit down the downside. If you were going to take the risk and leave it in, and nice pop back up here. The resistance right now would still be around the 95 area. All right, be careful there, and it'll come back down here and retest the 74. I'll get down to 76. So we have support down at 74. So kind of uneventful there with the rotation down there to the 76 instead of 75. Kind of annoying. What are you going to do? Can't complain. We've gotten our levels matched up very nicely with us. All right, coming back down here to these lows. Again, down here, 74 areas are next support. Okay, quickly coming down here to the 74 area. Again, always keep your stops in place. As you never know when there's going to be some extra energy that creates a rotation one way or the other. So keep your stops in place. Protect us from any kind of crazy moves here. All right, again, make sure you keep your stops in place. We're looking at this 65 area next. All right, market kind of ran through there. Looking at the 65 area next. All right, coming down here to the 65 now. That's why we keep our stops in place, because we have to get out and then look for the next opportunity. I got a couple points there against our first entry point there at 66. Did not get to 65. Got down to 65 and a quarter there. So be careful there at 65 if you are going to you're going to take it. Can't fill there if you didn't cancel it. All right, got a quick rotation off of that. Market is a little bit of pressure here this morning. All right, there's the 64 worked very nicely here. We're almost at the point where we might have to extend our stops here a little bit to take into consideration the volatility here. All of a sudden, we're starting to move, and of course, it's always to the downside, right? All right, 58 next level. Let me give you some more levels here on the downside. Below the 58, we've got 46, 35, 28, and then 19. 46, 35, 28, and then 19. Again, we got down to 64, got up to 66 there, and came off again. We're almost at the point where we have to consider extending our stops here, especially if we continue to go down. We're going to get some more volatility here. Got run over there on the 74, and 65 is kind of working out a little bit much better for us. There are the additional levels in the chat for you in case you missed them. They're there to kind of guide us through the day. We're not going to love any trade we put on, and we always keep our stops in place like we did there with 74, because that was not kind of just knife through there. And again, that's going to happen, especially when they inject some volatility in the market. It's the big move here in the downside here. So we haven't had one of these moves in a while, which is going to, hit some stops, especially into the long weekend holiday here. All right, next support level we're looking at is down there at the 58. Okay, continue to be under a little bit of pressure, looking at the 58 level next. Bonds here, a little rotation here to the inverse trade, maybe. I don't know. All right, got down here to 61 and change, and then pop back up. We're looking at the 58 area. All right, and that's 58. Next support level, a little resistance right now would be around the 85 to 87 area. All right, we're just kind of hanging here on the lower end of this range. Next support level we're looking at is down at 58. The little resistance would be around the 85 to 92. 85 to 87 area. Now coming here to these interim lows, we're looking at the 58 level next. It's our next support level. Again, if anybody has any questions, feel free to ask in the chat. We don't mind questions. We are trying to find areas of inflection to create opportunities to scalp the market. Sometimes we're not going to find those perfectly, and we have to make sure we keep our stops in place. And that's why we always keep our stops in place no matter what. And then we're always looking at the next opportunity. So kind of ran through the 74 area there, but the 65 area worked okay for us. And then now we're just kind of gravitating here to this interim lows. Our next support level on the downside we're looking at is down here at the 58 area. Yeah, no problem there, Anthony. I get it. A lot of stuff going on these days between you and me. We got to find the time together. We'll be okay. No problem. We'll get it done on when we get back next week on Tuesday. We'll shoot for that and go from there. I just want to wish everybody a great Labor Day weekend in the United States. I have a good long weekend. Hopefully the weather is good around you, wherever you may be. A little chilly here. A little bit. I mean, it's not 80s. It's not 60s either. So, but I wish it was a little warmer. But it's okay. Alrighty. Okay, it's trying to inch its way down here. We got 58 as our next support level. Got down here to 60 and change. Okay, if anybody has any questions, feel free to ask in the chat. Don't mind questions. Alrighty. Hopping up here a little bit, a little resistance, like I said, around the 85 to 87 area. We'll stick with that. Got down here to 60 and a quarter. We were looking at the 58 area. All right, popping up here a bit. And if anybody has any questions, feel free to ask in the chat. We kind of ran through some of our levels there. And now we're just kind of popping back up here a tad. Some people are appreciating this little pop back up here. We have a little resistance around the 85 area. Got up here to 72 or change. All right, we are kind of hanging here in these interim lows. We're looking at the T8 area as our next support level. Resistance again would be around the 50, 85 to 87 area. That could change. All right, well, definitely got ourselves in a little bit of range. I'll take in here a touch. Again, looking at the 85 to 87 area, some resistance if we get up there. All right, well, again, we're coming back up here around 74 area. A little resistance right now would be 85 to 87 if we get up there. And kind of downside support down here at the end of next level is down there at 58. So in the middle here, especially because we kind of ran through some numbers, kind of no trade zone. All right, definitely trying to inch its way back up here a little bit. Again, this is kind of tough to say that it's going to go up or rotate back down. So instead of trying to guess, we're just going to be patient here. If anybody has any questions, feel free to ask in the chat. The resistance, you can see our blue band's coming in there around the 84, 85 area. Right, we're slowly upticking resistance around 85 to 87 area. Blue band coming in there at 84. Gotta keep that in mind if we get up there. All right, well, we only got up to 75 and change there and came back down. So now we're getting back down there. A little support again, like I said, would be around the 58 area. Again, we'll quickly rotate the back down here to these lows. Next support level we're looking at is down here at 58. All right, so finally drifted down here a little bit. Of course, we had 58 and got down to 59 and a quarter. So there you have it. Waited all that time and missed by a tick. Now, what are you going to do? All right, come back down here again. Be careful there, especially the bar closed at 59. Definitely a riskier. Definitely looking at the 58 or 7 area if you're depending on your aggressiveness. All right, got down right there to 57. So again, we talked about making a nice little rotation there to 57, adjusting a little bit. If you did take the 57, you're getting a nice little pop back up here and risk-free, and you should have got filled down there. So nice little rotation there against. We made the adjustment, had to wait a little bit there, had to wait like a half an hour or so before we got some opportunities. But if you did jump in there, and again, made the adjustment there because of the price action, suggested going down to 58 and 57. And we had a nice little pop back up here against that. So nice little opportunity there. If you did adjust a little bit with no heat, and next support level we're looking at is down at the 46 area. If you're trying to stay long, only make sure you don't lose any money on the trade. And a nice little scalp there for us against the 57. A good way to end the day after having to be very, very patient here for a few half hour or so, because we never got up to that 85 area, and it just kind of did nothing. But paid off here by being a little bit patient and waiting for an opportunity. And you see the additional levels there in the chat for you. As the market continues to downtick, we're looking at the 46 area next. There they are. Those are the levels that we're going to kind of use in case the market continues to slide down here a little bit. And again, markets are closed on Monday, at least in the United States, because of Labor Day. So there's no trading on Monday. And because we ended on a nice trade here, why don't we just call it here? At least we were very, very patient and waited. But you have the additional levels there. And again, everybody here trades differently. Be careful and keep your stops in place. We saw we ran through 74 like it was a hot knife through butter there, so that didn't work out too well. But that's okay. We're able to make it on the other opportunities that we had.
Well, have a good weekend with your family, Saul, and everybody.
Yeah, everybody. If everybody's having his family over, I hope you have a good time. If you're just enjoying the weather, hopefully the weather's nice. And we will talk to everybody on Monday. Take care, everyone. Happy Labor Day.
I'm going to duck out a little bit early, too, so I'll post the levels one more time and hope you all have a good weekend and see you on Tuesday.
Thanks, Maureen. Appreciate it.
Bye-bye.
A quick shout out to Lacey. Hey, Lay, you back? Let me know in chat. I did send you out a brief description about what we do here through the Zoom chat. Let us know that you got it. For those that are joining us through our socials, join us live now in Zoom or register for Zoom for your free access pass to come in on a daily basis. We're at the end of our group coaching session. We do it daily from 9 a.m. to 11. Right now it's 11:18 a.m. The afternoon session is for one-on-one coaching, so inquire if you are interested. If you're new to trading, come on into our Zoom with a free access pass. Just go to daytradingmarkets.org. If you're an experienced trader, do the same. We're all looking to help you develop consistent profitability. So pop in now. Yeah, just register. You get an email to come in on a daily basis. So come right to your email, the email you register with. So make sure you register with the right email. Claire, are you in earshot? All right, we're going to be coming out of our socials now. Daytradingmarkets.org is the link to come in. Join us live. If you're interested in learning how to scalp or scalp better. We're going to pick up $200, $300, $400, $500, $600 per session. And we're in the business of helping you to learn to do that.